Good morning and welcome to TA for Traders on Friday the 10th of March. I'm Nigel Croft. In this short video we'll be looking at the soft commodities. In coffee we expect further price falls. Wheat, where it's broken an uptrend and we expect the supports to be tested. Corn, it's on the bottom of its trend line, but the MACD is rolling. If the trend line breaks, expect further downside. In soybeans, we're expecting a short-term rally, but this will be a selling opportunity as all the moving averages are moving together and are starting to roll. And in feeder cattle, we expect another short-term rally, but it's a bearish medium-term outlook. Thank you. So let's start with coffee, and we expect further falls to come here. You can see that the market fell below the moving averages, and actually they gave very little support, which is always a worrying sign. And now we've got the 20 and 50-day tracking down and the 200-day only marginally above, and that's starting to roll over as well. We've got negative momentum indicated by the RSI and by the MACD, so it looks a negative picture. On the longer term weekly chart, here you can see the downward trending 200 week moving average. The red line is a negative, as is the yellow, which is the 20 week moving average. And you would expect it to come back and test these support levels. On the support resistances for coffee, there's resistance at the downtrending 20-day at 143.63, and then at 151.4, and there's support at 134.89, and then at 132.85. On wheat, you can remember last week I drew this parallel channel, and I was concerned that we were just trading along the lower boundary. You can see now that we've had confirmation of a break to the downside. Immediately you would expect the supports around the 4.19 level to be tested. And then which is also the uptrending 50-day moving average. But on any upside, the 20 days now rolled down and will give resistance at 4.34, and it looks like it's broken the trend. The RSI is now breaking down as well, back below 50, indicative of negative momentum. And you can also see that the short-term MACD is now below the long-term MACD, and it is shouting out a sell signal. So it's all turned a bit bearish on wheat over the last week, and expect the supports to be tested, and if they don't hold, further downside. On the longer term, perhaps not as bad on the longer term. This is the weekly pattern, in that you can see we've actually broken the trend. We haven't broken the complete resistance, but certainly broken the trend that was coming down. This could then therefore just be a flag. If it can hold the supports and move back up on this weekly, because you've still got positive momentum. The RSI is still above 50 and the MACD still showing positive momentum, so it's not all lost. Certainly the daily picture looks negative. This weekly is not as bad. So let's just see what happens in the daily and see if it can move back into that into the uptrend. On the support resistance levels, we've got the resistance at the 20-day, as we said, is rolling down, 4.333, and then at 4.429. And we've got immediate support at the 50-day, which is still tracking upwards at 4.188, and then at 4.176. In corn, we're right on the trend line. You can see that I've drawn this trend line back from August through the lows of August, December, and then another one is December, and we're right on that trend line. If it doesn't hold, we're getting negative momentum starting to appear. We've got the MACD rolling down, and we've got the RSI back below 50. So if it doesn't hold, it would be another bearish picture, unfortunately. You can see we've got the downtrend in 200-day moving average. That will continue to be a negative influence on this market. I mean, you can see here back in January how it influenced the market there. And as we go down, it won't offer much support and then will become its own resistance line. So very important to see whether we do hold this trend line in the short term. On the longer term picture, it's not really showing us anything. Still a bit of positive momentum on the MACD. The RSI is now back to neutral. You can see the support, the immediate support from the 20-week moving average at 3.53. But there's a lot of resistance on the upside. Looking at the support resistance levels, there's the resistance immediately from the 20-day moving average 3.679, then at 3.753, with the supports coming in at 3.516 and 3.46. On to soybean. Here we're expecting a short-term rally. Over the last 4 days, the price has fallen quite dramatically, but the RSI has actually just become slightly oversold. So I would expect a short-term bounce. Quite interesting on this chart that you've got all the 20, 50 and 200-day all within a point of each other. Now they are all starting to track downwards, so it is a negative. We are going to get a lot of crosses here, bearish crosses as they cross as they're all going downwards. So that's going to be a negative influence. But I just feel that with the slightly oversold position, there may be a short-term rally, but this should be used probably definitely as a selling opportunity with these downtrending moving averages and the MACD just starting to indicate a divergence and shouting out a selling indicator. On the longer term, looking at the weekly, you can see this breakdown that we've had on this weekly chart. You would expect it to come down and test the lower Bollinger Band at some point. MACD starting to roll and the RSI is starting to show negative momentum. So it's starting to be a concern on this chart as well. You could also say that there's a potential head and shoulders formation. If you look at left shoulder, head, right shoulder is above the left shoulder. So the left shoulder would give support on any breakdown, but it's starting to show that. But as I said, on the daily, which I'll just nip back to, it is slightly oversold, and so don't be surprised if there is a short-term rally. On the support resistance levels, all the moving averages are around 10.3 giving resistance. Then there's this resistance at 10.399 and the support's at 9.84 and 9.45. Finally, moving on to feeder cattle, where the picture looks slightly different to the other markets. It's had a break up today on today's trading and looks reasonably positive. The RSI, as you can see, is ticked back above 50 at 55.47, and the MACD also have just the short term just moved above the longer term, which again is a positive sign. Got immediate resistance from the 50-day moving average at 126.55. It looks different on the longer term chart though. If you look at the weekly, you can see this continual pattern of a bear market: bear, flag, drop, flag, drop, flag, drop, flag, drop. So this just looks like another flag in the bear trend. Now the key level to watch, it will be these resistance levels here, as I'm just pointing out, which are about 131.85. If it can break above there, then it will have broken the trend of lower highs, which would be very positive. But at the moment, going back to the daily, I mean the 131.85 are these levels here that you can see. On the daily, yes, it might push up, but it'll be into resistance and just needs to be watched. So just watch it for the just watch it again for the moment. I think these resistance levels will hold, and I'm looking at the longer term trend as the trend, so wouldn't be surprised if there's some more downside, but just go with the flow to the upside in the short term. So that concludes TA for traders for Friday the 10th of March. Please remember that the advice given and the opinions given in this video is for educational purposes only and are my opinions and should not be taken as investment advice. I'll just show you a quick disclaimer at the end. Please do read it. Thank you very much.